Hi everyone, my name is Tykhonov and I'm a junior at Marquette University. I'm a domestic financial analyst at Applied Investment Management Program. Today I'm going to be presenting Cohen and Steers. Their ticker is CNS. Cohen and Steers is a global investment manager specializing in liquid real assets, including real estate securities, listed infrastructure, natural resources equities, and other income solutions. As of March 31st, 2021, Cohen and Steers had $87 billion of assets under management. The company is headquartered in New York, and founded in 1986. There are revenues divided by investment vehicles, and one of them is institutional accounts, the other is open-end funds, and the third one is closed-end funds. On the right, you can see some stock information, including its price, market cap, 52-week range, 2020 revenues, and a 12-month price chart. And now the recommendation. It is recommended that the AIM Small Cap Fund purchases shares in Cohen and Steers at $67.56 with a price target of $82.58, representing a 22.23% upside. The open-end investment industry is expected to grow at a 6.6% CAGR over the next 5 years, providing CNS an opportunity to expand their AMU and revenues. Cohen and Steers have an excellent track record of increased dividends and the payments of special dividends, which is expected to continue increasing shareholders' value. With the formation of Cohen and Steers Private Real Estate Group on April 19, 2021, the company can capitalize on the $15 trillion U.S. commercial real estate market that is private. The first driver is organic growth. Cohen and Steers assets under management have shown a continuous trend of positive inflows, increasing at a 15% organic growth rate in fiscal year 2020. At the end of 2020, the company showed a record $80 billion in total AUM, up from $72.2 billion at the end of 2019, showing approximately a 10.66% increase in AUM year over year. The company's past organic growth resulted in a CAGR of 7.4% from 2015 to 2020, and in 2021, Cohen and Steers reported an increase in preliminary AUM of $83.1 billion, showing an increase of 2.4% from the end of 2020. Management expects AUM growth to exceed the 2020 average AUM by around 15% as markets are expected to improve in 2021. The rollout of COVID vaccines, business reopening, and distributing stimulus payments, with AMU expected to increase due to the firm's diverse products, offerings, and investment strategies. Revenue will follow a similar trend, rising 15.9% in 2021. The second driver is open-end investment funds boom. The Cohen and Steers Open-End Investment Fund is the largest investment vehicle with $35.2 billion assets under management, contributing 44% of the firm's total AUM. According to Morningstar, 90% of their open-end funds are rated 4 or 5 stars. The domestic and international economic growth expected to continue over the next 5 years. Open-end industry assets are forecasted to grow at an annual rate of 6.6%, to arrive at $45 trillion. CNS can capitalize on this total addressable market over the short to long term to increase AUM and revenue over the next several years. Last but not least, the third driver, dividends to the moon. In the past years, Cohen and Steers have focused on giving back to their shareholders to enhance shareholder value. At the end of 2020, CNS paid out a special cash dividend of approximately $47 million, or $1 per share. The company has paid a total of $14 per share in special dividends over the past 11 years while remaining debt-free. In addition, increasing dividends annually since 2011, including the latest quarterly cash dividend paid out in March 2021, 45 cents per share, an increase of 15.38%. The company's strategy has been paying out between 50 to 60% of their earnings expectations. In the future, Cohen and Steers dividends are expected to follow a similar trend due to their liquidity position. To reach an intrinsic value for CNS, a 5-year axis equity model was created, using a terminal growth rate of 1.75% and a cost of equity of 9.21%. Intrinsic value of $78.85 was reached. Sensitivity analysis of the terminal growth rate and cost of equity of plus or minus 50 base points range from $61.53 to $106.79. Additionally, a price to earnings multiple valuation was calculated using a 2022 earnings per share of $3.56, utilizing blended average price to earnings multiple of 21.80, resulting in a relative value of $77.61. Finally, a dividend yield ratio multiple valuation was calculated. Dividend yield of 1.58% resulting in a relative value of $98.73. Now the risks. The first risk is performance of real estate. The volatility in the real estate market or a decline in returns on investment in real estate securities could negatively affect the company's earnings. At the end of 2020, approximately 61.1% of CNS assets under management are concentrated in real estate securities. The second risk is institutional client. Cohen and Steers' largest institutional client, Daiwa Asset Management, could be affected by the Japanese yen strength in the market and regulatory environment in the Japanese mutual fund market. And the third risk is competition. Trends towards continuing shift in market demand to index funds and other passive strategies could compress Cohen and Steers' advisory fees. Cohen and Steers has a strong management. Joseph Harvey has been the CEO of Cohen and Steers since February 21st, 2021. Prior to his appointment, Mr. Harvey joined the company in 1992 as a REIT analyst. He also served as a portfolio manager from 1998 to 2016 and chief investment officer from 2003 to 2019. John Che was appointed chief investment officer in 2019 as well as serving as the head of global real estate. Matthew Stadler has been the chief financial officer of Cohen and Steers since 2005. Previously, Mr. Stadler was a managing director at Lehman Brothers and chief financial officer of Neuberger Berman. Due to Cohen and Steers' organic assets under management growth, strong management, positive image, projected growth in the open-end investment industry, and increased emphasis on shareholders' value, it is recommended that Cohen and Steers be added to the AIM Small Cap Fund. This opportunity should not be passed on by the AIM program due to CNS position for future growth. Thank you for listening. If you have any questions, my email is listed below. You could also ask me questions in D2L as well as during the Friday live Q&A session. Thank you.